Hello everyone and welcome to Investing Angles. Today we'll discuss oil and Exxon Mobil. But before we get started, please make sure to subscribe to our channel and support us with your likes. This is oil. This is the short-term perspective. What we are seeing right now is that oil is moving down in an impulsive manner. And this is kind of scary, at least concerning. So we have an impulse down here. We have for wave A1 or A, we have a wave B or 2, which was clearly corrective. And now it looks like oil formed another impulse down. And this is marked as wave 3. So we had a flag which was formed over the last 2 days. And we think that this is wave 4. So technically it aligns almost perfectly within the longer term channel. And now there is a chance that oil is forming its final wave of this big impulse. If this completes somewhere here, well, that's we will consider it as a potentially wave 1 or the end of the impulse, wave 5 of 1. And in this case, well, after wave 1, we would expect some consolidation or correction for wave 2, and then potentially another wave down will start. That's a possibility right now. That's what we are seeing. However, I would like to mention that the current wave 3 here, it is possible that this is just wave 1 of wave 3, and I'd like to make it in a different color. So this could be just wave 1 of wave 3, and this could be wave 2 of wave 3. So that's a possibility. And what we are seeing, let me remove here. So that's another possibility. So wave 3 gets extended. So we will be monitoring this anyway, and that's what we are seeing right now on a shorter term. So technically, oil is entering our minimum target for wave 1. If we look at the slightly bigger picture, like this one, this is what we discussed way back in December. And oil hit the target with a great precision, so it made a higher high above the October high. And it is possible that it formed a very nice flat, almost with ideal proportions. And now it's moving down towards the new low, which would be below 65.5. So far, we are seeing an aggressive move down, and the oil is moving impulsively. So that's the perspective. And let's have a look at the candles, whether they support this particular move. So what we are seeing on a daily frame, 6 in a row red candles, and this is definitely formed a top on the daily frame and on a few smaller frames like 2 and 3 days. What is important here is that oil is breaking below the 200 days moving average, which is an important support line, now resistance. On a 2-day frame, we have a similar condition, and if oil moves down a little bit more tomorrow when the 2-day frame is closing, this would be a 3 black crowns on the 2-day frame, which is very significant development. This is the weekly closure, potential weekly closure for tomorrow. What we are seeing here, that oil, in order to mitigate this formation from the candle's perspective, oil needs to rally about 2%. Well, it's still possible. It's very reasonable to expect from a fast moving commodity like oil to make this type of move. However, considering the bearish odds on the daily and smaller frame, so this is not a very probable move, would be tomorrow. But again, we will see how the day ends. And let's have a look at what is happening with Exxon Mobil, which is related to oil somehow. What is this is our chart that we shared back in December 28, almost months ago, and updated the date here. So what we are seeing here, the two perspectives. First of all, I was looking for a perspective of an expanding triangle here, and then a move towards wave 5. The only consideration that prevents this from happening, so if oil forms an impulse here, so technically it would invalidate the potential triangle, because triangle doesn't have impulses in its waves. And even though we have this target, and the target was outlined by multiple technical perspectives, which we recorded in a video a couple of weeks ago. You can watch there, and or you can look at our website, investingangles.com, where we post this information. So then there is another chart. There is another count that I'd like to show. This is the most probable at the moment, especially if oil confirms and forms the impulse here. So far, it's fairly, not oil, Exxon Mobil. If Exxon Mobil forms an impulse here, this would be wave A of a bigger correction. So far, it is on track, just needs a lower low, somewhere around 100 or 100 to 95. 96 to 88 would be an ideal target for this type of wave. Okay, so that's the Elliott wave, that's the projection. And if we look at the candles, so the candles are somewhat concerning too. So yesterday Exxon made a confirmation. This big red candle was a confirmation of a reversal on Harami here, and the chances for move lower are fairly significant. We will see how the week ends. So far, it's been an attempt to form a bottom, but if this red candle, if Exxon closes tomorrow with this red candle, it would be technically a cancellation of an attempt to reverse. And what we are seeing here is the last chart here is the freshly made MACD bearish cross on a 2-month frame, which is a very significant frame. We discussed this potential development before, and let me expand the chart. So this technically this is the same or similar, the cross of a similar magnitude that happened in 2008. And in 2008, Exxon declined significantly. So this is what we might see here because of similarities of technical patterns, but again, it is not confirmed yet. So that's the possibility. All right, so that's been all for oil and Exxon Mobil. Support us with your likes, subscriptions, check our website investingangles.com, and happy trading, everyone.